Well, hello everybody. It is October 8th here. I think we're technically a day late. Yesterday was my birthday. I decided to take the day off, but we do have another housing market update for you. And something that has struck me is that the market numbers look very strange to me. Is this really anything unusual, or is this just because it has been so long, think 2019, before we've even seen a normal-ish looking market? We don't even recognize it anymore. So I want to talk about that and more, and about why we're in kind of a weird space for this time of year. So the rest of the numbers are actually very normal-ish, but I think we're in a little bit of a weird space. Let's get started. My name is Stephen Meade with Domicile Real Estate here. I am the managing principal broker. We are on a mission to help California's renters become homeowners, and we are the real estate company for people who love houses. This is our Southern California whole market real estate market update for October 8th, 2025. Let's jump in and I can start to tell you what I am talking about with a weird October. Okay. So the first weird thing I want to talk about is our active listings on the market. And I think this is something that people watch. And, I maybe made some hints about this in the past. I'm not sure how accurate this graph is in the absolute sense. So in the truest words, I mean, it is showing the correct numbers. These are the numbers of active listings under $1 million and between $1 and $2 million in LA and Orange counties. However, I've had a belief for a while that we have a lot of homes that are listed on the market that I wouldn't exactly call motivated sellers, right? These are sellers that might not really be willing to sell at market price. I mean, maybe we might want to call these make me move sellers, right? Like if someone would give me this much for my house, then I would agree to sell it. But they are not sellers who say, I've got a job move. I need to get market value for my house and move to a new house. I think some of this inventory is not real inventory. And to me, real inventory is a seller who is willing to take market price and terms for their home. If they are not willing to do that, they are not really a seller. They're kind of a hopeful seller, which is not exactly the same thing. But I think what's remarkable when we're looking here is if you look at where we were at last year, the crest for inventory was really under $1 million, was around the middle of October. That's when the highest inventory was there. And then it started declining towards the end of the year. For our 1 to 2 million category, it was about the same, right? And now you look where we are today. So, I mean, we're actually higher right in that under $1 million inventory, but I'm not entirely sure that's what people think it is. And you look at this, that number crested all the way back in the middle of August, right? For under $1 million. That inventory has been declining since the middle of August. That is very, very unusual. Now, if we look at our 1 to 2 million category, it's even more apparent, right? When we're looking at this, our inventory actually crested at the end of July. So it has been steadily dropping, albeit not very quickly since the end of July. And if you look at these absolute numbers, these are kind of interesting, right? 1 to 2 million, that inventory level is maybe only 10% higher than it was last year. And I think that when you factor in the lack of motivation of some sellers, I don't know if that actual inventory is really any higher. If we look here, we're probably at something like, 7,200, something like that. And, of where we were last year, under $1 million. And if we look at right now, this year, that's looking like an 8,500 number, right? And even that is only like 10 or 15%, right? There are points this year when we were having inventory levels that were 20% higher than they were last year. And that is simply not the case. Okay. New listings coming on the market. This one I think is interesting, right? Our level of new listings coming on the market is about the same as it was at last year in both our categories. And we see both of these have sort of slumped down since their peaks. Like there's definitely been, since we got into August, less and less inventory coming on the market in terms of new homes hitting the market. If we look at our new escrows, that is also remarkably similar to last year. It's actually a teeny bit higher for our $1 to $2 million listings. That's the rate that homes are coming into escrow. And we are almost exactly about the same as where we were at under $1 million. So what's interesting to me is if you think about sort of the mental attitudes of this year, right? I think we had a strong spring followed by, let's be honest, a pretty brutal summer for sellers, really a great opportunity for buyers. I think if you bought a home in the summer of this year, that was actually a pretty good move for you. We kind of had really a pretty dismal looking July and August, but here we are in October, and believe it or not, things are looking very similar to where they were at last year. We have about the same number of homes coming on the market and about the same number of homes going off the market, right? Like that's kind of interesting. And if we look at our absorption rate, right, those are almost exactly where we were at last year. But I think what's remarkable in this absorption rate is look how much better these absorption numbers are than we were through late spring and the summer. These numbers have actually crested up quite a bit, indicating a market that's improving. Now, the reality is these numbers are centered around 70%. What does that actually mean? It means that it is a pretty mild, seller's market. I think if you've got the right house, the right product, you're going to find buyers for it. I think it also means that, buyers, if you were buying that home back in June or July, I mean, if you look at this chart, I mean, that's arguably when you really kind of had your best market leverage with sellers. Now, if we look at our close prices, again, this is a 30 to 60 day look in the rearview mirror. If you take a look at these, you do see all three of these categories have rebounded from their low number, right? Now, overall, if we look at where we were at last year, the 75th percentile, guess what? That is absolutely up versus where we were at this point last year. Our median, absolutely up a little bit where we were this time last year. Be wary of national statistics. I tell people real estate is a local game. These stats are based on LA and Orange counties. I would say most of our buyers are cross shopping in these areas. So these are the numbers that are probably more important to you. And even at our low end, right, which is most affected by interest rates, we definitely even see some modest gains, right, in through there. Like our number is a little bit higher than it was at that point last year. We'll call those inflationary. I think it's interesting to look at this 75th percentile end of that market and just to see that it has in fact grown quite a bit. If we look at our percent still active on the market, that is holding relatively steady. Maybe it's a little bit better than the numbers were earlier this year. I think that sort of makes sense and coincides a bit with our absorption figures. If we look at our list to close ratio, a lot of people don't understand what a chart like this means. And what a chart like this really means is this is a measurement of how close are the expectations of buyers and sellers, right? So when we saw right during the pandemic, right, when the housing market was just absolutely nuts, you saw these numbers looking like 105%. What does that mean? It meant buyers were valuing the homes a lot higher than sellers. When you see this number drop pretty far below 100%, that starts to mean the opposite, right? Sellers are a little bit more hopeful versus where buyers are thinking the home prices should be. If you look at this number now, we are very, very close in both of our price categories, right to 100%. That really is in a market where buyers and sellers both seem to have a pretty good idea of where the market is for either the home they're selling or the home that they want to buy. If we look at our days on market for new contracts, right, that has gone up a little bit. I wouldn't overread into this. We have pretty much been in the 40s since July. I think that's a very normal amount of marketing time. Actually, it's short. Normal marketing time is like 60 days when you look at sort of long-term averages. So we're still well below sort of that normal days on market average. And remember, this is for the homes actually going into escrow, right? These are the people, these are the homes that are actually finding buyers. You saw during that spring, it dipped down there and then it started to go back up right through these summer months. Now, if we look at our affordability chart, this is one that I am a big fan of. I think this chart is really important to kind of talk about, are we in a situation where things are getting out of control? So there's a couple things that I think are interesting here. One is that rents have actually gone down a little bit in LA and Orange County. If you look at this, and remember, this is rents of single family homes. So we're attempting to really gauge that sort of median rental for this. You'll also notice something else is that rents are actually a bit closer than we have ever been in a while to inflation. So I think there is a narrative out there that housing has just vastly outstripped the CPI. And if we go back to 2018, yes, is that true to some degree over the last 7.5 years? The payment on on the median priced home is approximately 180% of, higher, whereas inflation is only 125% higher for those numbers. But if you look at this rent figure, this is actually not really that far off from where inflation says it should be. And I think that's an interesting distinction here because I don't think the housing market is quite as crazy and dysfunctional maybe as people think it is. Our payment index, you'll notice that did go down, but now it's gone a little bit back up again, partly because we've had two things happen. One, those median prices have gone up. And two, there's been a little bit of interest rates nudging back upwards. Not uncommon. We find all those drops in rates are built into expectations about the market. And then when the truth happens, like a rate reduction or at the Fed or whatever, the market kind of readjusts to those expectations. But if you look at this, these numbers are not terribly far apart from one another. And I think when you look at that, that really tells me about the health. I think people who are waiting for some big drop in property values, I just don't see it happening. We just don't have the ingredients for that shaping up. Now, if again, you look at our prevailing mortgage rates, a lot of this year and in the past, we've been kind of kissing that 7% market. And then we've had really since July, kind of a slow and steady decline. And then now we're kind of in that low sixes neighborhood. Overall, honestly, those are not terrible numbers. I tell people these are sustainable numbers. 3 and 4% mortgages are not sustainable. So yeah, that's kind of where we're at. Thank you so much for watching. I know last week I teased the idea of doing a condo specific video. We did get a comment on that. A couple of people have sent me private notes as well. So we are working on doing that. In fact, I'm going to be doing a video with someone else. I'm bringing another expert who actually runs an association management company that manages about 225 HOAs. So we're going to kind of get a really great perspective on that as well. So definitely stay tuned on this channel. If you've not liked and subscribed, absolutely do that so you'll see that video when it comes out. Don't forget to hit the notification bell. Thanks so much for watching. If you have any needs for our expertise, we can help you buy, sell, or evaluate your options so you can make good decisions here in Southern California. Definitely reach out to us. We would absolutely love to help you. Let's see, I think that's it. And we'll see you again real soon.